Hello and welcome to AusBiz on this Wednesday. I'm Andrew Gagan. Good to have you with us as we get across the global view. Let's check out what happened overnight. Global shares on the rise on signs of easing trade tensions, while longer-dated US Treasury yields fell. Firmer US consumer confidence data also helped buoy US investor sentiment, with Wall Street's main indices rallying after a three-day weekend. All 11 major sectors on the S&P 500 advanced, with consumer discretionary and tech shares leading those gains, and strength in the AI-related Mag 7 group of momentum stocks pushed the Nasdaq higher. Chipmaker Nvidia is due to report its quarterly results tonight, with expectations it will post a 43% jump in earnings per share. Temu parent PDD Holdings fell heavily after reporting a 47% fall in first quarter profit and missing quarterly revenue estimates. Well, US consumer confidence improved in May, bouncing back after deteriorating for 5 straight months, in a sign that Americans are less concerned now about the impact of tariffs. Meanwhile, new orders for US manufactured capital goods plunged in April, with orders for durable goods, ranging from toasters to aircraft, dropping 6.3% last month. And FOMC member Thomas Barkin has said elevated uncertainty has led businesses to stop hiring and hold off on future investment decisions, saying they do think there's a light at the end of the tunnel, that there will be some certainty, whether it's the tax bill or some of the trade terms, but I think they're still just waiting it out. Well, US Treasury yields fell as concerns over rising global government debt supply were partly eased by expectations that Japan could issue less longer-dated debt, the yield on the US 10-year note falling around 8 basis points to 4.42%. And Treasury sold $69 billion in two-year note, which was well received. And the US dollar has strengthened, with the yen coming under pressure from a sharp fall in Japan's longer-dated bond yields there, while the greenback was boosted by improved US consumer confidence. The Aussie dropping around 0.5% overnight to 64.5 US cents. And Bitcoin is trading at around 109,000 US dollars. Commodities are lower across the board. Oil prices pressured by concerns of a supply glut after Iranian and US officials made progress in their talks, and on expectations that OPEC Plus will decide to increase output at a meeting later this week. Brent crude futures down 1% at $64 a barrel. Copper is down around 2%. Iron ore falling 1.5% at $96 a tonne. And gold has eased on rising risk appetite. Spot gold down around 1% to $3,300 an ounce. All right, well, let's return to focus on the US markets, what we're seeing at the moment, particularly ahead of Nvidia's earnings due out tonight, our time. Angelo Zino joining us from CFRA Research. Angelo, welcome back. Good to have you on the show. Let's begin with those expectations there for Nvidia. Of course, it has a very high bar that it's set over time. Has managed to meet those expectations. What are you looking forward to?
Yeah, so thanks for having me, Andrew. When we kind of look at the expectations here for the April quarter, at least, we're looking for revenue of about 43 billion or so. That would imply year-over-year growth of north of 60%. And April quarter revenue, the July quarter, we're looking for about 46 billion. Of course, that is more important in terms of the guidance and where the street reacts. But we are seeing clearly some deceleration on a sequential basis. The April quarter number would imply decelerating growth to about 10% on a sequential basis, and further deceleration to about 6% in the July quarter. Part of the reason for that clearly has to do with lost revenue in China. That's well known at this point in time, but we want to see greater clarity in terms of what the China market looks like for Nvidia. But as when we kind of think about the expectations here, looking ahead, it's all going to be about the data center revenue. That's going to be driven by Blackwell, of course, and we do think that revenue looks good, especially in the U.S. with the hyperscalers, and that momentum should continue as we progress through the calendar year.
So, Angelo, how much of a potential hit to Nvidia is that Chinese market then, obviously, given that Donald Trump did ban Nvidia from selling its H20 chip
Yep.
into China. And I did see that Jensen Huang, the chief executive there, saying that he expecting China's AI market to grow by some $50 billion in the next few years, which would obviously be a big miss for them.
Yeah, no, absolutely. I mean, when you think about the China market, it is the second largest market out there for a company like Nvidia. You think about all the hyperscalers. The biggest hyperscalers are of course in the U.S. The Microsofts, the Alphabets, the Metas, the Amazons of the world. But apart from that, you've got some major hyperscalers that are increasing their spend out in China, specifically Alibaba, Baidu, Tencent, among others. When we kind of think about the impact on China to Nvidia, it's about 13% of their revenue. But what's more important is the data center side of things, because their gaming related revenue is really not going to be impacted here. So we're looking at about 8 to 10% of their revenue potentially being impacted. And that would imply, we're looking at potentially about $4 to $5 billion run rate in terms of China revenue on a quarterly basis here in the July quarter, in terms of lost revenue potential. And you were correct. I mean, in terms of the potential size of this market, we're looking at that potentially being as large as 50 billion, and it would essentially largely be Nvidia driven in nature. So that is largely lost revenue or a lost opportunity for the company.
Meanwhile, it is perhaps looking at other alternative markets, namely in the Middle East, particularly in the wake of Donald Trump's visit to Saudi Arabia and UAE. What's that likely to perhaps, or what's the potential there for Nvidia, do you think?
Yeah, I mean, I think more so than just the actual impact for Nvidia from Saudi Arabia, I think is the larger opportunity at hand, and that is the fact that the administration essentially scrapped what's called the AI diffusion rules that were supposed to go into effect this month, and that came from the Biden administration. The fact that he scrapped those, I think, left a lot of investors out there wondering how they were going to look at Nvidia on a country-by-country basis. But in fact, what it actually is happening is that the administration is almost using Nvidia as its bargaining chip, and that's what we saw here with Saudi Arabia. It ended up being a huge deal for Nvidia and the overall AI ecosystem. And we think what you're going to see is almost a domino effect. Other regions of the world essentially creating deals with the U.S. And the Trump administration for more deals like this. And that's going to create more revenue opportunities for NVIDIA. Sovereign AI, we think longer term, has the potential to be a massive market for NVIDIA. Right now, probably less than 5% of their revenue.
Now, Angelo, beyond NVIDIA, what are you watching, particularly among the Mag 7 stocks? Don't know if you're across Apple, but obviously in the wake of President Trump threatening that 25% tariff on its products that are made outside of the US. And so clearly, I mean, in India is obviously a big market for them.
Yeah, I mean, as far as Apple is concerned, we remain positive on the shares, and there's a lot of uncertainty right now as far as Apple is concerned, and it all has to do with the unknown tied to tariffs. I mean, clearly there's still 30% tariffs that you have out in China, and Apple is trying to move their manufacturing or as much as possible into India. Our hope is by the end of next year, they're going to actually be able to get most of their U.S. product needs from India, if not all of it. But clearly Trump is making some noise out there in terms of potentially throwing a tariff, whether it be on smartphones or iPhones specifically. But there's still a lot of unknowns out there as far as the tariff situation is concerned. Right now, hardware is under this national security umbrella tied to the 232 semiconductor investigation. We're awaiting those results. We'll get something along the lines here over the next couple of weeks and months, and that's going to impact the broader tech space. But overall, we think Apple is well positioned. We think they're ultimately going to have to deal with some higher tariffs, and we do think ultimately they pass those higher tariffs to the consumer, and they are best positioned because of the best of breed brand and the fact that they have an ecosystem and a way of working with the telcos to potentially smooth out some of those higher tariffs over a protracted period of time.
Angelo, always great to catch up with your analysis from CFRA. Thanks for joining us.
All right, thanks for having me.
Let's return focus locally, and we are expecting a higher start here. SPI futures are up 0.6%. That comes in the wake of that rally we saw, particularly on Wall Street overnight, bearing in mind that investors had a 3-day weekend there, so also reacting to that news more recently that Donald Trump has given a reprieve to EU there in far as initially slapping a 50% tariff, or warning that he would, a tariff on EU products, but that has now been delayed. All right, stay with us. We're going to get right across the open in just a couple of